Permissioned capital. Why gold absorbed the debasement trade. Flint West reporting. Listen, everybody's confused because they're watching the scoreboard without reading the rule book. They're staring at gold like gold ate Bitcoin's lunch. Nah, gold didn't eat Bitcoin's lunch. Gold is the cafeteria food approved by the school board. Bitcoin is the meal everyone actually wants, but it isn't on the menu yet. And the reason that matters is simple. Capital doesn't flow where it should. It flows where it's allowed. That's it. That's the whole movie. Everything else is just the plot twists. The setup. This wasn't a debasement party. People keep calling this a debasement trade like it's some fun little money printer go brr rally. No, this wasn't champagne debasement. This was pain management debasement. This was governments and systems staring at their old debt, that sweet, cheap, low-rate debt from yesterday, and then having to refinance it today. Different world. Old debt was priced like oxygen. New debt is priced like blood. And when you refinance and roll over at higher yields, you don't get a party. You get a refinancing shock. You get a world where the question becomes, can we carry this? Can we fund this? Can we survive this without something snapping? And when the system asks survival questions, it doesn't buy the asset with the best memes. It buys the asset that won't break a balance sheet. The rule book. Permission beats correctness. Here's where retail gets wrecked mentally. Retail thinks markets are meritocratic, like the best asset wins by logic. No, markets are permissioned. Capital is not free. It's handcuffed. It's bound by mandates, risk committees, compliance, career risk, accounting treatment, collateral rules, optics, politics. So capital doesn't ask, what's the purest hedge? It asks, what can I buy and still keep my job? That's the real key performance indicator, employability. Gold maximizes employability. Bitcoin still threatens it, not because Bitcoin is wrong, because Bitcoin is loud, because Bitcoin is still treated like a decision, and gold is treated like a default. Gold's advantage, it's already inside the system. Gold is not just a hard asset. Gold is a licensed hard asset. Gold is politically neutral, globally recognized, central bank compatible, balance sheet friendly, ancient enough to be boring, boring enough to be responsible. Gold is the safe answer on the multiple choice exam. Even if it's not the best answer, it's the answer you can defend in a meeting. Bitcoin, on the other hand, Bitcoin is the answer that makes the room go quiet. It's not that it's wrong, it's that it invites a follow-up conversation. And institutions hate follow-up conversations. They want assets that come with no meeting, and gold comes with no meeting. This content is brought to you by Bobby Giggs. Promote your brand here and reach a wide audience across platforms like YouTube, Instagram, and Facebook. Follow the links in the description to get started. The hidden driver. This was sovereign and central bank flow energy. Now, let's say the quiet part loud. A meaningful chunk of the gold bid is not macro traders. It's sovereigns, reserve managers, central banks, institutions who think in decades, players who don't want sanction risk, counterparty risk, political strings, or dollar dependency. And those players? They can buy gold in their sleep. Bitcoin, even if they want it, they often can't touch it at scale yet. Not politically, not operationally, not optically. They're not trying to chase returns. They're trying to rebalance power. Gold is a power asset that doesn't need new paperwork, so gold gets the first wave. So what happened? Sequence, not failure. Here's the key. This is sequence, not defeat. Gold tends to move first when trust erodes, geopolitical risk rises, rates are high and unstable, balance sheets need stability, and the world wants neutral collateral. Bitcoin tends to move hardest when liquidity returns, volatility compresses, institutions are forced to chase, and optional becomes mandatory. Gold is the admission phase. Okay, the system is stressed. Bitcoin is the escape phase. Okay, we need an exit. And right now, we're still in admission. The pinpoint position, where we are right now. Here's the exact position on the map. We're in a phase where debt rollover pressure is real. Yield is high enough to compete with risk assets. Systems want collateral and calm. Institutions want defensiveness. And hard money flows are being captured by the asset with permission. So gold is expressing fear, neutrality, and collateral demand. Bitcoin is still expressing future, upside, and escape velocity. Gold is the system hedging itself. Bitcoin is the system being replaced. Those are different moments. What flips the regime? The menu change. Now listen close, because this is the hinge. The menu changes when Bitcoin becomes one of these things. collateralizable at scale, directly or through accepted wrappers, boring enough for committees through volatility compression and maturity, politically survivable to hold through clarity and normalization, structurally embedded in sovereign or institutional products, a benchmark reality where you're fired for being underweight. That's when Bitcoin stops being a trade and becomes a position you must justify not having. Gold is already there. Bitcoin is approaching there. And here's the twist that messes with people. Gold's strength does not disprove Bitcoin. Gold's strength proves the underlying disease is real. Gold is the smoke alarm. It tells you confidence is cracking. Debasement is recognized. Neutrality is being priced. Dollar duration is being questioned. So Bitcoin isn't failing. Bitcoin is waiting for the pipes to connect. Because gold has plumbing. Bitcoin has acceleration. Gold is installed in the building. Bitcoin is the new power grid being inspected. So don't get emotional at the scoreboard. Gold didn't defeat Bitcoin. Gold got approved. Bitcoin is still the meal they don't want to serve yet, because once they serve it, everybody stops eating cafeteria food. And when the menu finally changes, it won't be polite. It won't be gradual. It won't be slowly allocating 1% over 5 years. No, it'll be stampede allocation. A violent repricing, a rapid new default. Because when capital gets permission, it moves like it's been starving. And trust me, it has. Flint West signing off.